I'm Catherine Ross, live from the NYSE, and we are here with Jim Cramer. Jim, earnings are again topping the market headlines today. We're looking at Qualcomm, Netflix, and Abbott earnings. So, Jim, let's just jump right in. Let's talk about Qualcomm, and I'm wondering, I think that something that everyone else is wondering too is why you chose this as real money stock of the day.
Well, I think that there's the possibility here of this stock having a multi-year move, like it did in 1999. I think that 5G is not a one-time pop. Yesterday on Twitter, when the stock was up 6, I said there's easy another 10. Looks like I was being conservative. And the reason why that is because Qualcomm owns it. They own 5G. They've got the right chips. And now that the biggest obstacle is clear, I think Qualcomm can have a much bigger move than it's already had.
Now, as I just said, Qualcomm is real money stock of the day, so you can head over to realmoney.com to find comprehensive coverage from all of our reporters. Now, Jim, I want to move over and talk about Netflix because they had mixed earnings, and you wrote a piece this morning on Real Money.
Yeah, well, look, I want people to understand a lot of what I do is try to explain what's wrong in journalism. Netflix comes out, and the first thing you see is cuts forecast. But if you were to read their shareholder letter and be a little more thoughtful and be on their call, what they're basically saying is, look, if the programming is good, the signups will be good. If the program is not good, then the signups won't be good. And we intend to have good programming. Now, what everybody on Wall Street's uncomfortable with is subjectivity. But when you look at their history of programming, it's not subjective, it's objective. They're going to produce good content, and therefore the subs are going to keep rising. So I make this point, there's a lot of people who are saying that Netflix is getting too expensive, going to $15.99 for the premium. Look at your cable bill. I know you don't want to look at your cable, but look at it. It's now up to where your taxes are. And I really think that you start thinking, wait a second, why do I worry about how much Netflix costs? So this is a kind of a ridiculous debate. There's room for Netflix, there's room for Disney, there's room for, as Reed Hastings said, anybody who produces content that is a must. So I call in Real Money, it's a necessary bargain. That's the term I'm now going to use going forward, necessary bargain.
I'm here for anything that keeps my cable bills down. Now, Jim, I think that this actually leads us into a great investing education question, and that is because you brought up Netflix's weak forecast, and I'm wondering, when a company has a weak forecast, does that mean that investors should sell their stock?
Look, it's a great question because a weak forecast is typically involving something that is out of their control. And if it's out of their control, for instance, Home Depot's moving hard today. The last quarter, they had a very bad February, and they didn't give you a forecast that was aggressive. But what people looked at was that it must be a trend that's bad. But the CFO, on about page, let's say maybe 2/3 through the conference call, told you not to worry, and Carol Tomei. And that was all you needed to buy. The stock was at 188, it went to 182, it's now 206. So what you have to focus on is in the conference call, why was the forecast cut? If it was demand, then I'd say probably you might have to sell.
Now, Jim, I want to ask you, there was more earnings reports. We had Abbott release earnings this morning, so I'm wondering, what was one takeaway that you had from the earnings
healthcare
report?
And I thought the quarter was good, and what happens is when you get a quarter like Abbott, where the forecast was raised to, but a group is down, suddenly you think that there might have been something wrong with Abbott. There was nothing wrong with Abbott. Abbott chooses Miles White, does not raise his year after the first quarter. That's been his policy. So if you followed his policy, you wouldn't be selling his stock, except for the fact that United Health, which is a stock that we own, it's almost suicidal. I don't know who's selling now, but they're smart, I guess, because their stock will only be down 15. Is that what they're about? I read through the United Health conference call. Did he declare war on Medicare, on the people who are going to change Medicare? Yes. Will it matter? No.
Jim, you and your team have owned Abbott since 2017. It's been a huge gainer for the Action Alerts Plus portfolio. So in terms of our audience, I want to remind them that they should look to Action Alerts Plus for a more long-term perspective.
Well, we did our last conference call, our monthly call, we talked about how to run a conference call. And Miles White, it was mentioned as how to do it. And I urge you to go back and look at our 5 rules from the last conference call, because I think it's pretty comprehensive and would help you. It was all educational. Remember, we're doing a lot of stuff that is just make it so that you don't blow out of an Abbott down 3. Maybe you should be buying it.
And we'll be covering Abbott more over on Action Alerts Plus. You can go sign up at actionalertsplus.com. And for all of you watching on Facebook or on TheStreet.com, we are now jumping over to our Action Alerts Plus members only club video. So make sure to join us there. Thanks, guys.